Hey there, Wall Street winners. It is Wednesday, April 3rd, and as we can see in the futures market here on the Bloomberg app, the Dow Jones Industrial Average is just about even. It's in the green, but only 9 points or 0.02%. Um, the S&P 500 is effectively flat. It was red earlier. All of these were actually red earlier. And the Nasdaq is in the red by 0.1%, not 0.10%. I guess 0.10, but 0.1%, which is about 19 points in the red. So these have come back. It looked like it was going to be a very red start to the day about an hour ago. And now that we're at 8:26 Eastern time, things are starting to come into the green. What is really green is oil. So if we move down to our oil stocks, we can see that crude is up again, another 72 cents. This crude has been increasing over the last 3 months on a fairly regular basis. It's taken some dips and corrected a little bit, but it has consistently been rising. If we look at the charts here in the 6 month, you'll see that starting down in the January timeframe, which is about here, down at $71 and change, up to 73, down to 70.99, and now it's all the way up to 85.88. So if you've been riding the crude wave with some of the oil stocks, you've done very well for yourself, and kudos to you if that has been the case for what you put some money into. Enbridge is up at $48.66. You've got Valero, which has been a rocket ship over the last 3 months, up at $177. Exxon, which announces results today, so this will be interesting to see what they come out with, is up 42 cents right now, pre-market. All of this subject to change. Was up $2.29 yesterday, almost 120, which was what I had predicted a couple of months ago. So that's falling in line. Marathon Oil has come back from the low 20s up to almost 29. I think that'll get up to the $30 range. All of these should continue to move higher if crude continues at the same level or moves higher. And then we get down into tech, and tech was beaten up a little bit yesterday. I think there's still going to be areas of tech that might get beaten up a little bit today, but there's also some areas for, I think, potential recovery. So one of the stocks that I do like, although it came out with bad earnings last quarter, is Palo Alto Networks, which is PANW. It was trading in a range of about 281, 280, 281, all the way up to the, say, 289 range. So in that envelope, a $10 envelope there, and it dropped down to 273. I think I'd watch this and maybe not buy it right now, but if it does come down into the 260s or even at the low 270s, I think this is a very good purchase for the next month or so. I think you should see it get back up into the 290s, if not to 300 within the next 30 trading days. Another one that I really like that came down to $90 yesterday was Cloudflare, and that was a super attractive entry point and then climbed back up to almost $95. So you made 5% there if you hit that at the bottom and rode that through to the end of the day. And I think it's going to do well again in the next 30 days, like Palo Alto, both of them involved in cybersecurity, and cybersecurity is front of mind for many organizations and where they're directing a fair bit of IT spend. If we continue to move down the list, a longer term buy in semiconductors, I would say, is On Semiconductor. I own some On Semiconductor. I bought it at a price well over $70 that it's at now, so I'm definitely holding it, waiting for it to come back. But I do think that this is a company that produces a lot of chips for EVs. And although the EV market is slowed down right now, when it does come back, it's going to lift this stock and it's going to move forward quite quickly, probably up into the 110, 120 range. So I do expect a recovery in the year, but it may take certainly longer than 30 trading days for us to get there. AMD, another chip stock. Intel beaten up a little bit yesterday. Both of these set and well positioned, Intel and AMD, for a chip recovery. So again, if you're thinking long term and just want to buy and hold something, I don't think you're going to go wrong with an Intel or an AMD over the next year or two, because the PC refresh cycle is, at least if it's not upon us, it's starting, and they're both going to benefit from that. As we move down, you'll see that some of the others that we like, Tesla, um, took a beating yesterday based on deliveries. I'd still kind of stay clear of that. I think it's got a little bit more room to correct, and then it could be a great buying opportunity because I do see some tremendous long-term benefit in that. The one stock yesterday in the market that really buffed the trend and went up instead of down with the rest of the market was Meta. I love Meta. I think if you ever can buy Meta on a pullback, you'll always be happy with that purchase. Um, it's a stock that just makes a ton of money and has free cash flow. It is a market leader. It continues to grow at double-digit multiples. Again, I don't think you're going to go wrong by putting some money into that in the long term. I got in and out of Nvidia yesterday. I played that a little bit as it dropped into the low 880s, where I thought it was an attractive purchase, as I mentioned on yesterday's video in the morning, and then got out as it started to move higher. Certainly didn't get out at the high. Should have held it for the rest of the day there, but still took a profit. So profits are always good. Google is it kind of sat around at the same level yesterday. It dropped and then climbed a little bit. I think it's got a lot more room to go. I think in the next couple of months it's going to get up to the 175 level. But we are in this kind of early Q2 timeframe where there is a chance for a bit of a market correction or pullback. So I am being cautious and trying to maintain a larger than normal cash position and get in and out of my positions, even if I have to take a loss, which I don't like doing. I may look at the benefit of taking a loss just to avoid a further loss if the market does correct. I'd rather get out of a position in the day than speculate as to what's going to happen in the greater market overnight. And then we can see financials. Again, the one that I really like here is SoFi. It dropped down. It's been dropping and going back up, but it dropped down at open yesterday, down to the 714, 710 range. Great opportunity to pick some up there. It recovered to 720 at the end of the day. It looks like it's up pre-market to 730. So this is a stock that is an easy stock to purchase based on the price that it's at right now, and it has a lot of long-term potential. So quite easy to make 1 or 2% in this stock on a regular basis, and could be a stock that you start off your investing strategy with if you don't have a large capital pool. So that's where we are today. Good luck with your trades, and we'll talk to you shortly.